Hello and welcome to another update about Bitcoin. So Bitcoin's chart is still pushing a little bit higher. We're now currently in a target area on the smaller time frame. This here is the daily time frame, and you can see that we are pretty much in the middle of nowhere, but not exactly, because while the price has reacted to the support area that was already outlined months ago and is pushing higher, it seems like we're far away from any upside Fibonacci targets, but that's not true. On the smaller time frame, you can see more detailed, or let's say, more fine-grained targets specified based on the microstructure. The reason why I show you here the daily time frame is to make it quite clear, where we currently stand, context-wise. There are new viewers, you could say, every single day that are coming in, and it's important to understand that really nothing unexpected is happening here. The idea was that we should find a low in either wave 4 or the A wave in this region. I already posted, I think in March, also on X, for example, that we should get a rally towards the, I think at the time I called it even the 91K region. Yeah, we are on our way to that area. Really not much happened since then, because we were still in the same price region down there, but now the price is finally broken above the trend line. Now we're finally on our way to that, to that resistance area, you could say, overall. But I wouldn't pay so much attention to, they're just levels, okay? What is more important at the moment, I think, is a focus on microstructures, at least to get signals, at least to understand where the structure is heading. And while I don't think it's so helpful to focus on microstructures when it comes to altcoins, Bitcoin's chart does offer important hints in the microstructure. At the moment, the price reacted to that Fibonacci support box that's been on the chart. We talked about it like every day over the recent weeks, and we broke above the trend line and are on our way higher. However, we are approaching now some structural resistance here around 88,850. So that's where we are now. Previous swing high. Breaking above, and we're already trying to, is a good indication indeed that a more substantial low is formed. That's already the thesis anyway. We had a small bull flag here and a breakout above the trend line, and the move to the upside is currently seen as wave A. So we could be working on a 5-wave move in wave A, could then see a pullback in wave B, before we go higher in wave C towards 130K. That's the bullish case. You know that one. It hasn't changed for months. It's very consistent with previous updates. And really, if you've been here for a while, then you know this scenario. This is the one that needs to give us corrective pullbacks along the way. If at any point we see an impulse to the downside that is large enough to break below key support levels that I will always provide on the smaller time frames, well, then we have really a first indication that the bears are taking the lead, and the red scenario in the C wave to the downside could drive the price lower. It is important to understand that the red scenario could take us into a bear market, while the white scenario could also take us into a bear market, but only after one more high to 130K. So we have one scenario that is maybe in the very short term bullish, because this B wave should still play out as a healthy B wave before we go into a bear market. And another one where we should actually go to an all-time high before we go into a bear market. But in both cases, they're very, very similar. We're very, very close to the end of a rally. Now, while you say, oh, but 130K is far away, it is, but not if you take into account the entire bigger picture, the rally from the 2022 low. You see that this is really just the last bit we talk about. Like the high probability element of that rally is done. And then up here, obviously, the risk was high in December, January. You always know the risk is high when the support area is far away. I often get blamed that the support area is so far away, but you know why it was there? Because the risk was there that we dip into it without breaking it, right? So that's why we show these, because they always indicate the risk. So people shouldn't really be... So they are designed, they're colorful enough and big enough, they're designed to give you an indication of where the price could be going while still maintaining the current structure. And if the distance to the lower of the, or let's say the lower boundary of the box is high, and you get worried, then it's typically indicating the risk is high. But now in this box, the risk is naturally low, or was low. Now it's getting high again. It was low again because we were in the box. But that's unfortunately typically a time when people switch off, don't watch the analysis, right? And then they come back when the prices are moving, but then we're already moving. So if you were here by any chance, if you've been with us over recent weeks, and you know that a bounce from the box was expected, and then maybe you found a position there. I didn't buy any more in April because I bought already in March. Spot. And yeah, we talked about several signals, like even the RSI on the daily chart, an oversold RSI, which was here in March, can provide, or was it even end of February, is typically a buy signal. Yeah, and it was again this time. Even though I always highlight this is not to pick a bottom, it can mean that we get another low or so afterwards. Yeah, but in this region, you know, that's not a signal that you use to put a tight stop. It's more like, okay, in this area. So talked about that when we're now on our way higher. Let's take a look at the smaller time frame microstructures. We're now in an area where a top could form. Quick reminder here, this is the area, or let's say the rally from the April low, yeah, from the 7th of April low. We are tracking a 5-wave move up here that could be in the making. And we're tracking this as a diagonal pattern. Wave 1, wave 2, the third wave could still be in the making, then a wave 4, then a wave 5. This third wave could now be close to a top. Talked to you in the last video that we should reach this area before forming a top, 88,800 to 89,470. I mean, we are there now. In the last week, I spent all of last week to remind you that we're still watching for higher, and 87.9K pretty much was the next larger degree upside fib level to watch and the next larger degree target for this third wave. But then based on the microstructure, I was able to give you, let's say, a little bit more, more fine-grained detailed targets here on the smaller time frame between 88.8 and 89.4K. I mean, it doesn't mean that a top has to form there, but you see that these levels are being respected clearly by the price. So I'm now watching, I mean, the wave count is now full, might of course get a few more upside squiggles. Maybe wave 5 there will go a bit higher. There's a pretty full wave count now. So what now? So now that we've reached all the targets, it's time to take a step back. I think the risk is high now. The risk for a pullback is high. And the pullback could be the larger degree wave 4, potentially, with support between 79,770 and 83,120. As I said, this support area will be moved should the price push higher. And all you need to know is, I think, the next upside level to watch is 87,473 and 90,282. These are the next two upside levels to watch. If we get there, it would be seen as an extension of wave 3 at some point. The microstructure might change a bit, but it wouldn't change the scenario because we have not confirmed the top yet. Any 5-wave move down at this point and a break below the Monday low that formed here at 86,400 would be an indication the larger degree 4th wave might have started. So these are the parameters we need now. I don't have a setup right now. There was a setup yesterday. This support box was reached twice. That's what they are for, to watch for a position if you want to. Like it was in a larger time frame, there was one here on the smaller time frame. For those who missed, maybe in a larger degree wave 4, there could be another opportunity. But let's see if the price gets there and how the structure is, right? Elliott Wave doesn't tell us a pullback has to happen. It's very important. Elliott Wave tells us that in the current structure, a pullback is now allowed to happen, and it tells us how high the risk is and where the support levels lie, the parameters to keep the current scenario alive. So for now, further upside extensions maybe in the short term are still possible, and then I'm watching 87,473 as next resistance. That's the update about Bitcoin. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.